Ladies and gentlemen, Glenn and GRV Global, thank you very much for giving me this opportunity to take you through gold mining in South Africa, past, present, future, lessons for the rest of the continent. And that's the most important part of my presentation. I'm Peter Major, mining engineer, corporate financier, fund manager. I came to South Africa in 1982, started with Rand Mines on Harmony Gold Mine. I've been here ever since. I'm not saying I've got the correct view, but I think I've probably got one of the best views of gold mining in South Africa, inside and out, from different aspects, from the miners, the politicians, and certainly the funders. I hope this is as unbiased and practical as I can make it, but please take it in that vein. I'm not trying to get a dig in anybody or any institution, but I'm trying to show facts. And I think the numbers and the facts point to what went wrong and point to what could go better and what needs to be done for gold mining in South Africa to be done better. I'm going to start right now, and hopefully the slides will do most of the talking, but I will give comments on most of them. Disclaimer is to put my employer Mergence at ease, that anything I say is Peter Major's, it's not Mergence's viewpoint. Half of the world's known gold still lies in South Africa, yet we have hundreds of abandoned mines during the biggest gold boom ever. Does not make any sense at all. For 90 years, South Africa was mining close to 50% of the world's per annum gold. This country is now down to 3%. Again, 3% in a raging bull market. When did we start losing? From the graph, you can see it was in the early 80s. China, world's largest gold producer for the last 4 years. In fact, largest gold producer for the last 10 years. But South Africa, who is #1 for over 90 years, is now down to 12 on official gold production and falling further below each year. So world gold mine production of about 3,300 tons in 2019. African continent produced about 850, larger than any other continent. But half of that is undocumented. We call it unofficial, small scale miners, artisanal. They don't pay taxes, huge environmental destruction, no safety, no standards. Almost total disrespect for the law and authority. And unfortunately, a lot of this comes from too much regulation and inability to enforce the regulation that's on the books. Basically, more regulation means more under the radar mining, which actually is worse for the state and its citizens. If we look at the big producers by country, depending on what source you use, South Africa is producing between 110 and 160,000 kilograms a year. That's 100 to 160 tons. But when you add up the production from mining companies, you're barely getting 110. So it's estimated over 50 tons of gold a year are leaving South Africa with no record, no taxes being paid. And we come down to Ghana, they're officially #1 on the continent. They're producing about 110 tons. Now this shows 120, so maybe only 10 tons is illegal. Sudan, Mali. As you go down, there's more and more illegal production going out, and it's harder to document. But one thing's for sure, the African continent has the gold. On reserve basis, Australia has the gold. Reserve means economically mineable deposits. This slide is already out of date because at $2,000 an ounce, everybody's reserves are up hugely. From hero to zero, South Africa led the world in market cap by far in 1980. And today, maybe 3% of listed mining companies are South African. From the country that set world record after world record, sinking shafts higher than the Empire State Building in 31 days, a record that'll probably never be broken ever. And that record continued on in 61. In 100 days, they were over 828 meters. Unbelievable. And this is 60 years ago. Mining opened up the world to South Africans of all races, all creeds, all sexes. What employer has broader opportunities for everyone, educated, non-educated, working mothers? South African Gold Index, it was a world-class investment for 100 years. Investment meant pension funds. It meant unit trusts, mutual funds. It meant people's savings. Yes, gold prices could be a little erratic, but when you average a 7% dividend yield and close to 7% capital growth over a century, that was a 14% total rate of return. The New York Stock Exchange, S&P 500, were probably doing 10 to 11. So the investor was earning an extra 3% for the risk of going into South African gold shares. So we said, mining is good for the country in every aspect. Gold mining revenue, jobs created, as the previous slide said. I started on Harmony, 33,000 employees. Val Reese, 40,000 employees. Those were real jobs, real careers, and long-term. These mines had lives in many, many decades. So in a revenue basis for the country, this graph is in real terms, but it shows this country is now getting less from gold than it was in 1933. And our population and our needs are much greater than that. And we still have the gold. We have other minerals too. If you add up mineral production, what it was worth last year, it's a nice spread: coal, PGMs, gold. But you can see coal, we produced $13 billion worth. PGMs, $11 billion. These are at today's prices. I'm using last year's production at today's prices. So gold is a far distant third. In fact, we produce enough iron ore to almost equal what we do with gold. And there's other minerals here. So diversification is great. It's the numbers that should be much larger, especially gold. Gold should be 5 times, at least 4 times what is shown here. And before we take our hat off and bow down for the applause for producing so many minerals, let's be real here. Chile produces $40 billion just from its copper in some years. Chile, with a population not even a third of South Africa's. So we are not as large as we should be, and we're definitely not as large as we think we are. Underground mines, that's mainly what South Africa is known for. They employ 10 times the people of open pit, only create 1/10 of the environmental damage, 90% local content. The dollar stayed in the country. The gold index averaged 8% dividend for 100 years. That's why people came here. It was a reliable, profitable industry. Today, dividends aren't even $85 million a year, total dividends from South Africa gold industry. So that's how much it has shrunken, despite a great gold price, despite us having all the ore. The gold index is very cyclical, yes. And when it moves, yes, it does move. Multiples. What we need to realize here, though, is the gold index isn't what it used to be. Only 25% of our gold index is South African. The rest is now overseas. Anglo Gold is totally overseas. Goldfields, South Africa, 85, 90% overseas. Our gold index versus the gold price, it's got a long downward trend. And this index doesn't show the dividend yield. And the dividend yield sustained it from the 60s, the 70s, the 80s, right up until about 93, 94. But since then, the dividend yield is so small, it's only the capital. And you can see the capital on its own, maybe the last 5 years, it's now beaten the gold index. The last 5 years, our gold index has beaten the gold price. But it's hard to believe that trend can continue very much longer. And by very much, I mean literally, can it even continue for a few more weeks or a few more months maximum? This is the actual revenue that we have been generating from our gold industry. And these aren't even real dollars. These are nominal dollars. So yeah, we're making what, maybe $5 billion revenue, perhaps a little bit more, but that's the same as we were making 40 years ago. And every other country on this planet is making more off gold than they were 20, 30, 40 years ago. We're the only one going backwards. Had we just stayed at 600 tons per annum, like we averaged for close to 60 years, look at the kind of numbers this country could have been generating. $25 to $30 billion a year just off its gold. You know, more than 5, 6 times what it's currently making. Deaths. People say how dangerous the gold mines were here. Yes, they were dangerous, as were mines all over the world, especially underground mines. That's where most of the deaths occurred. But all countries have improved going through this horrible phase of when life didn't mean as much. And we all know that in the 1800s, the early 1900s, US coal mines alone had 3 times the fatalities of South African gold mines from 1900 to 1960. So South Africa should not be highlighted doing anything that wasn't even as bad as most Western countries like the UK, Germany, and the US were doing. Perhaps we were too slow here making the improvements that we now have, but nobody's ever done enough to improve. We know that. You just got to try harder going forward. And this graph shows how much the reduction has been in deaths per ounce of gold produced. But you can take it too far. You know, if we really want to go to 0 deaths per ounce, we will probably have no ounces produced. And we're getting close to that kind of tipping point as I speak. Mine wages increasing at double the inflation rate for the last 20 years. As if that's not bad enough, productivity falls 40%. Men are moving less rock, not just producing less gold. Our population growth continues up, gold production continues down, and there's no end in sight to either of those. So we're not using gold to try and benefit this country anymore. And we should be. Things changed after the 87 gold strike. That's when the industry, the country, and the world realized the unions now have much more control over the mines than the mining companies, than the shareholders, than the management. And if that was used correctly, it wouldn't have to be as bad as it is now. It has not been used correctly. So we've had mine layoff, mine closure, mine layoff, mine closure ever since. And Eskom's out of control electricity price increases. They make it impossible to even plan for deep level gold mines that we know use huge amounts of electricity. And this isn't even mentioning how often you get blackouts, power outs. And it's inconceivable anyone will invest in a deep level mine with this kind of state. So what happens? We close mines and we open casinos. And that's where a lot of the former employees go, but those aren't real jobs, not as we knew them. Shopping centers, same story, from 65 mines in the 80s to 8 gold mines today. Lots more shopping centers, so that's where some of the ex-employees are going. Government has to step up and admit they've had an enormous amount to do with this, that they have allowed the unions to dictate policy and management of the SOEs that mines are very dependent on: electricity, water, transport, highway. Legislation, more is not necessarily better. Policy certainty, that's good, but if you have bad policy, policy certainty isn't helping either. And too many ministers, all putting in their 2 cents, all trying to legislate what they can with respect to mining. So we go from the world's most ambitious underground mines, the world's most expensive underground mines, the world's most high labor component underground mines. We go to a wreckage, a ghost town, a destroyed industry without a war. South Africa now spends more time and money stripping and destroying mines and filling in shafts than building new gold mines and sinking shafts. South Africa opens many, many more open pit mines now than underground mines, which we know are 10 times more destructive, and they create less than 1/10 of the jobs an equivalent underground mine has. And who's running our mining industry today? How many mining ministers have we had in the last 10 or 12 years? 8? And each of them has their own policy, their own ideas. And there's 28 individual government ministers, as we said, all doing their bit. Most people can't even abide by 10 commandments, and the DMR gave us 5,000, 2,000 new pieces of legislation, 3,000 policy changes. Is it just one big laboratory here? Because that's how it's coming across, trial and error every year. And this phobia about ownership, that it's never enough, that 26 went to 30, and there's calls for 50% Black ownership in mining. And it's not just the goal that you're shooting for, it's how government and unions intend the mining companies to get there. It's almost no negotiation. It's just forced down without working through consequences. We don't need Warren Buffett to tell us you do not borrow money to buy shares. Most people are born with that message drilled into them. Yet by raising the BE ownership in all these companies, it just compounds what happens borrowing money to buy shares. Sasol was as powerful as any of the mining houses here, other than maybe Anglo-American. And all these BE deals that were done in 2008, 2009, 12, 13, 14, 15, all these deals on borrowed money that were done when the Sasol share price was $35, $40 US. And now look at it today. And who's funding all of that? And Exaro, to do any kind of deal now, these are the sort of BE documents and myriad of deals that have to be done to consummate a BE transaction. Who reads this? Who's going to invest based on this? People will disinvest based on this, especially foreigners. And yet we've got a fantastic gold price. Whether it's defying odds or not, it's there, it's real, and it looks like it's sustainable. Oppenheimer realized in 1917, after 20 years of cyclical diamonds flooding the market accidentally when you open a new mine, or the economy goes down or a war happens, he says, I'm diversifying into gold. Gold almost never goes down. And you can't do anything to the gold price by your production. It doesn't matter how much gold you produce. It has no bearing on the price. So an important rule in life, where are we on the curve? Where's our gold mining sector on the curve? On the macros, it doesn't look bad. The rock we're taking out of the ground in South Africa, even with lower grades, grabbing whatever's available, is nearly the highest it's ever been. 330 Rand a ton, $330 a ton, 320 a ton. Every ton of rock that comes out from underground, this is what the miners are getting. And this is a country that could mine $100 rock and pay 7% dividend yields and give a return on capital. So if we can't even make it now, this graph summarizes better than any the state of our industry. There's lots of risks here: legislative, union, community, labor, ESCOM, and you've always got the original technical risks: ore body, depth, grade, suppliers, currency. So what's the problem? There's a checklist here. Government doesn't have to fix all these overnight, but they should be addressing these and fix the easy ones. You know, get some easy wins in to get everybody's attitude up. All this gold, and we're producing less tons every year from underground, from a peak of 80 million tons down to barely 10 million tons a year are coming out from underground. And the min required is now down to 90,000 min from a high of 530. Those are all good jobs lost forever in our gold mining industry. And the productivity, even those remaining, the productivity is at a 100-year low. And sure, lots of reasons for this, but reasons don't matter in life. If you can't address it, your industry will close. And that's why the industry here is closing. Thank heavens for $2,000 gold price, which is giving it a few years longer than it would have had. Gold staying at $1,250, $1,300 an ounce. But this productivity, it's a result of all the factors that I've shown. And no one will open mines unless this productivity can go back up to 60, 70 ounces per employee. And it's not just because grades have fallen. They haven't fallen irreparably down, but look at the tons per man. This country's underground mines are moving the same tons per man with all our modern machinery, LHDs, drill rigs, dump trucks, conveyor belts, moving the same tons per man as 80 years ago. That's the sad and hard reality. No shafts being sunk. That means your logistics are extended. You're transporting gold a lot further. You're losing the grade. You're losing man hours per ton that you're transporting. And you have to sink shafts every year, like we did for 100 years. But we haven't done it for 20 years. Not only are we not sinking gold mine shafts, we're filling them in. So that is confirmed suicide. That is confirmed that we don't want a gold industry any longer. And this is the loss. A loss to investors and a huge loss to the country. The country always made more in taxes and royalties than investors ever made. A complete total fallacy that investors raped this country of its resources and took all the money offshore. If investors didn't even average an 8% dividend yield for 100 years, they took out much, much less than the government took, that the country got. Even had they taken all their dividends out and half the dividends stayed in the country. What is 4 to 8% compared to the other 92, 96%? So it's total fallacy and whitewash that these gold resources were exploited for the benefit of international people to the detriment of South Africa. Where are we on the curve? As a country, we're way down the curve because we have raging metal prices for the last 15 years. We have cheap international finance. We have no sanctions, no restrictions, and we cannot grow this country at 1%. Yet in the 40s, 50s, and 60s, we had tightening foreign restrictions on capital and even on immigration, even on corporates investing here. And we had flat to bad metal prices in the 40s, 50s, and 60s. So even with all those big factors against us and a very strong currency, we could still grow at 4.5%, 5% for 25 years. Now all these macro factors in our favor and we can't even grow at 1%. It's criminal. The radical new labor force in South Africa's mines. Back to the 70s, every man for himself, and syndicates are all over like they weren't even before then. And even the organized mines find that every second and third miner is an illegal miner that's bribed his way in, that's falsified documents, that's busy working for himself and the syndicates. Sibanye, in the end, they gave up and had to close some of their large gold mines and shafts. They just could not weed out the illegal miners. So yes, it's the mafia and syndicates that are now taking over gold mining in South Africa. And as Warren Buffett says, your equity price sooner rather than later will reflect your earnings. And even with running gold price, the earnings have come up off zero base, but will they be sustainable? Not unless the gold price keeps going. It can't just stay at 1950, 2000. It has to keep rising or the earnings will not go up. Any hope for our gold mines? Yes, in a kind of a diabolic way, there's hope on a weakening currency. That means we don't have to rely totally on productivity. The currency does keep them alive longer, but it won't lead to new mines being started. But it shows anybody buying gold in this country averages 14%, and he doesn't undergo any of the risk that he does buying equities. Our gold ETF has beat a very high money market rate for the last 20 years. So people in South Africa are realizing gold is their best, safest investment over all else, over property, bonds, money market, and equities. And could changing 2 words do that much to our industry? Could we get rid of job reservation, not just on the gold mines, but on all companies in South Africa? And could we start rewarding all parties, meritocracy, productivity, not what party or race they are? The DRC destroyed their mining industry virtually completely. And look how quick it resurrected with change in policy. That's all it was. Policy change, regime change, dropping all the plethora of regulations and say, just get in and get mining. Maybe we can implement some regulations once you're here. But unless you can throw the whole bunch out and start with something simple and fair, transparent, enforceable, you can't turn your industry around. In Zambia, very similar experience. They were able to turn their industry around. And yes, they haven't kept to the regime/policy change, and it's slowed things down. They should be producing more than in Congo, and they're not even close because they've had too many changes too quickly on the negative side in their policy regime. And Chile is the shining example. Your policy must only improve with time. It must only increase investor sentiment and willingness to come in. You don't need to go through negative policy changes. There's a lot of fear and anxiety out there, which is good for gold, and we've got the gold. But where do we go from here? What do we do with a positive gold environment? Warren doesn't even like gold because it pays no interest. He's been telling us for decades. He says he only buys when there's value. Yet he's now buying American Barrick Gold, near the top. He must be very bullish to be doing that, such a conservative, experienced investor. So is it really that difficult to make tomorrow better than yesterday? There's never been an easier place to make tomorrow better than yesterday and today than South Africa. Thank you.